Welcome. Welcome to forpay.org. This is Consumers Dr. Bengala, a non-profit company focusing on healthcare access to all Americans. Today's topic, this is a common topic, folks. I keep hearing, why bother buying a health insurance? I keep hearing over and over, why bother? Why waste my money in buying a health insurance? This is how we have these 27 million Americans. They can afford it, but they don't want to pay for it. This is a common occurrence. I want to address that, folks. The mystique behind it. Because all Americans know, if you go to the hospital, they'll take care of you no matter what. Because by law, hospitals have to take care of you if something emergency arises. But they don't understand the consequences of not having health insurance. First, whatever the God forbid, whatever the reason you end up in the hospital, you have no insurance, and you're taken care of. But finally, it'll get to you, folks. It'll get to you. By the time you get discharged, you will have a big bill, and you're stuck with it. And most of the time, folks think, why bother even paying? That's come back to haunt you. Let me give a better scenario. How about making or paying for the health care and getting your money's worth back? Money's back, your money will come back to you 10 times over. How can you do that? How can you put money aside and they'll get back you whatever the money you spend, you'll get it back? Yes, there are ways, folks. Let me talk about that. Suppose you buy even if you have deductible health insurance, even if you don't want to pay for the deductible health insurance, why getting a health insurance? I understand that logic. That's fine. But still, you can contribute to your health savings accounts. Only thing is, you cannot deduct it from taxes. If you want to have a deduction, if you're independent, you're employed, you're making money, your income is over 50,000, if you want to get a deduction, yes, you need to have a deductible policy. If you don't want to buy a health insurance, you can still put money into the health savings. I'll tell you, there's a big there's a benefit in putting money aside into the health savings. I'll tell you how. So once you contribute health savings, I was saying $10 a day, $20 for family, $10 for the individual, $20 for the family, which comes to $300 for the individual and $600 for the family. At the year end, you will have $3,600 and $7,200 for your family. How does it benefit? By putting money into the health savings. Yes. That money you're putting is basically a savings account. In the health savings account, the contributions, if it's deductible, if you can deduct it from taxes, if you don't buy a health insurance, you can't deduct it. But if you buy a deductible health insurance, you can perfectly deduct from your income. And if your income is around under 50,000, you can deduct it, almost all of it. So in any case, once you contribute into your health savings, I was telling you, by year end, you will have $3,600 for the individual $7,200 for the family. Okay, that is being deposited into a brokerage account. There are a lot of banks, HSA banks. They let you, HSA bank. Personally, I myself transferred all my assets from the Optum Bank to HSA Bank. The reason why I did that, I wanted my money to be in the brokerage. So they let you participate in the Ameritrade or Fidelity, whatever the brokerage account you have. I think the Ameritrade works with HSA Bank. So that $7,600 for the family, you're divested into the index funds. And index funds in general, if you buy a Vanguard index, S&P index, QQQ index, you will get 10, 15, 20%, folks. There's without any question. And it sits there, and it is like a saving account. It's like an IRA. It's better than IRA. Let me tell you, it's better than IRA. The reason why I say that money you have in the HSA gives you a freedom in healthcare. Why do you say that? Why can you give freedom? Yes. If in 10 years, a lot of people have the same reason. Oh, I'm healthy. I don't need to see any doctor. I don't need health insurance. Fine. But at the end of 10 years, you're talking about 80 to 100,000 in that savings account, which appreciates over a period of, next whatever it is, whenever you want to retire, that money comes in handy, folks, for your health. Not only is it for your health, you can keep on accumulating. It'll last for your lifetime. You don't have to use it if you don't need to, but that gives you an added advantage for you. The reason why I say that, for whatever the reason, you want to buy some medicines, if you want to see a doctor, and you don't have insurance, right? Then you can use that account. They have a debit card. You can use that account, pay as you go. When you pay for the care through cash, it's a 70% discount, 60 to 70% discount, folks. I'm not kidding. So you pay your debit card. I said, I'm paying cash. So whatever it is, you can use that. The money you spent on that care, it's not taxable. And appreciation what you got over a period of 10, 15, 20 years, it's not taxable. They can't put a tax on it because it's coming from your HSA account. And HSA account is flexible enough for you to take care of yourself, whatever the health care, whenever you need to use it. So that goes a long way, folks. So HSA, without a deductible health insurance, you can still participate. Only thing, the contributions are not deductible. You understand what I'm making it sure you understand. Even if you don't have deductible health insurance, you can still contribute. And the contribution what you make are not deductible, but the withdrawals and appreciation is deductible once you have an HSA account set up. So folks, I want every one of you to set up. It's like an IRA. I'm sure every one of you have an IRA. Even when you're doing an IRA, do a Roth IRA. I'm not sure how many people understand within a SEP IRA and a Roth IRA. Roth IRA is after taxes. So once you contribute to the Roth IRA, then you don't have to pay taxes during the withdrawals. Same thing with HSA. You don't have to pay any taxes when you withdraw for the healthcare reasons. Yes. Roth IRA is the same. So I hope I made it clear, folks. A lot of folks can afford buy health insurance. but they don't want to be bothered because they're young and healthy. I can understand all the, this is where we have an issue with most of the folks when they don't want to buy health insurance because they think it's too expensive and it's waste of money and I can't afford it. They gives you several reasons not to buy health insurance. That's why we have so many uninsured. One of the things that's going to come up is how people with no insurance, there is a way the federal government can say, okay, if you don't have, with the Obamacare, they're mandating everybody should have health insurance. If that's what happens, people who don't buy health insurance, what will happen? You have no exemptions when you file your taxes. That's another thing you need to look into that, because if you don't buy health insurance, you might lose your exemptions, deductions, automobile deductions, expenses, all those exemptions will be taken away. So just watch out, folks. And that's a good thing to have health savings accounts, no matter what anybody. HSA is almost like having a Roth IRA. Roth IRA and HSA is, if you don't have health insurance, it's after taxes. You're paying after tax. So that's okay. So you can buy Roth IRA, you can buy an HSA. Folks, thank you for listening. And I hope I've given you an advice which is worth the thing to talk about. Everybody, when you say about health insurance, it's too confusing. They know it's expensive, and healthcare in general is very expensive. But there comes a point people have to realize there are ways to get around, and paying upfront will lower the cost of the care. Yes. Thank you guys for listening. We will see you in the next episode of forpay.org. This is Consumers, Dr. Bengala. Goodbye and God bless.